Welcome to Market Momentum. Today, our AI analysis is showing a massive split in the financial world. We are going to break down the critical signals across stocks, crypto, and metals to show you exactly where the opportunities are and, just as importantly, what traps you need to avoid.
All right, so here's what we're going to cover. We'll kick things off with the incredible strength we're seeing in US stocks. Then we're diving into the big warning signs flashing in crypto. After that, we'll check out the high-stakes situation in precious metals, and we'll wrap it all up with the key takeaways you need to know. Okay, first up, the US stock market. You know, the big story here lately has been just how impressively resilient it is. So there was this brief 3-day dip, right? Had some people online getting a little nervous, but look what happened. Major indexes like the S&P 500 didn't just crawl back, they bounced back with some serious strength. And that right there, that tells you everything you need to know about the underlying confidence in the market. The analysis is pretty clear on this one. The big uptrend for the S&P, the Nasdaq, and the Dow Jones is still very much intact. The really crucial point here is that any little bit of weakness is seen as a green light. Investors who've been waiting on the sidelines are just eager for a chance to jump in. Now, let's see how that confidence carries over, or actually how it completely falls apart when we turn to the world of crypto. Because wow, the picture here could not be more different. I mean, it's just night and day. For stocks, the theme is confidence. For crypto, the one word you need to remember is caution. The strategies for these two markets are polar opposites right now. We're just seeing bearish signals pop up everywhere. You've got key technical indicators that have totally flipped to sell. We've seen really important price floors get smashed for both Bitcoin and Ethereum. And maybe most telling, there's just no new money, no new liquidity flowing in. So what's the play here? It's all about defense. First, you just have to wait. Don't even think about a new position until prices move decisively above those key resistance levels. Second, for now, just avoid opening new positions altogether. And third, and this is the big one, if you are holding anything, you have to protect your capital with a clear stop loss. All right, let's switch gears and talk precious metals. We'll start with gold, which has just hit a really major objective. So gold recently touched the 3,778 level. Now, this isn't just some random number. It's a significant target based on our technical analysis. And what happens when a market hits a big target like that? Well, it enters a sort of holding pattern, which is exactly what we're seeing now. So the strategy is super simple. Just hold. Now, let's be clear. That doesn't mean sell, but it also doesn't mean go out and buy more. We're in a waiting game. We need to see a clear signal, like maybe a couple of daily closes above this key level, before we even think about putting new money to work here. And finally, we get to silver. And oh boy, this is where the story gets really dramatic. You know, they don't call it the devil's metal for nothing. To really understand the risk here, we have to go back to 2011. Just look at this timeline. It's wild. In April of that year, silver went on an absolute tear, up 24% in just 8 days. But then it crashed hard. It fell 31% in the following week, completely wiping out anyone who got in late. You know the old saying, history doesn't repeat, but it often rhymes. Well, the price action we're seeing right now has some eerie similarities to back then. It suggests that, yeah, silver could push a bit higher for another week or so, but the risk of a sudden, brutal reversal is incredibly high. And that brings us to the million-dollar question, doesn't it? If you're not already in the market, is jumping in right now really worth the risk of a 2011-style collapse? Our analysis suggests you need to be extremely cautious here. So let's tie all of this together. Let's create a clear, simple summary of the strategy for each of these different asset classes. Here it is, the whole playbook on one screen. For US stocks, it's a green light, buy the dips. For crypto, it's a defensive game. You wait, and you protect your capital. For gold, it's a yellow light. We hold and wait for a clear signal. And for silver, well, the risk is just too high for new entries right now. It's a definite red light. So we'll leave you with this final thought. The market is telling very, very different stories in its different corners. And the most important thing you can do is make sure the story you decide to follow actually matches your own tolerance for risk. Thanks for joining us on Market Momentum. If you found this analysis valuable, we'd really appreciate it if you'd subscribe and like the video. It helps support the channel. We'll see you next time.